For this trading strategy to be effective and these indicators to be effective, you need to have watched class 6, class 7 and class 8. Make sure you're trading between the 99 EMA and the 25 EMA. You'll be looking for the indicator to give you a long signal or a short signal. Once you get either a long or short signal, you will then go long, then place your stop loss, take profit, then watch the magic happens. You most likely be correct 90% of the time. Now let's get started. Alright, to get started we need to add indicators. As I showed you here in our previous class on how to use TradingView, in this class we're going to be using TradingView as well. So just click on TradingView and then add indicators. What you're looking for is EMA. This is the one that you're looking for, so click on that and you can see that it's now added here, but I need 2 of those, so I'm going to click again. Again, if you're using the basic plan of TradingView, this will only allow you to get 3 indicators at a time, but it doesn't really matter because you can always add indicators to favorite so that you can change them around. So the next thing what we want to do is to come to these indicators. Maybe before we do that, right click and then select dim to black. So now that we got that sorted out, come here and click on this icon titled settings. What we're looking for here is to click on input, and then we're going to make this 25. Then I'm going to click OK. Then I'm going to come to the next one. I'm going to click settings again. Then I'm going to type 99. Maybe here we can change the style, so we can change this maybe to purple, increase the length, then click OK. So now we've got our stuff. The next thing we're looking for is to add another indicator. When I click on indicators again, then I'm looking for an indicator titled William Fractals. As you can see, it's also here, so I'm going to click on that. I already have this indicator configured here on my other chart. If I can come to that page, I already have it configured here, and this is the chart we're going to be using because this is my account that I'm using, and this is a premium account, but you don't have to use the premium account. Again, I'm going to be showing you how to get indicators that are only available on the paid subscription or on the premium account, even though you're using the free basic account. So now that we have the Williams sorted out over here, I'm going to come to settings again here. Click on settings, and now what we have to do is to copy exactly what we have on the other side. I'm going to click on my indicators here and select these settings here. So basically we have to copy this input and put it on the other side. So when it comes to input, leave it on 2, and then when it comes to style, basically these icons here signifies that you should either buy or sell, but you can see that there are other way around, so we need to sort it out. And I'm going to come here to settings. I'm going to change this to triangle up and change this to green. Then I'm going to go to the other one, triangle down, and change that to red. So that's what we're looking for. But as you can see on my other side, I have it as a cycle, so let's do that here. So I'm going to change this to a cycle, and you can see everything is now the same, which means we can now jump in to the other chart and start trading from here. So I'm going to click X. So basically how you're going to use this indicator is that you're going to be looking for a buying signal whenever the price range or whenever the signal is shooting in between these 2 lines here, which is the 25 EMA and the 99 EMA. So you can see that here between the 25 and the 99 EMA, we've got a buy order over here, we've got another buy order here, and whenever you actually see this in between these 2 lines, here, that is going to be a valid trade. So whenever you see any signal in between these 2 lines, that's going to be a valid trade. As you can see, all these here were valid entries. However, these ones are invalid because they are outside the the 2 EMAs. So let me just clean this up. Again, if you're not following, what we're looking for is an indicator in between these 2 lines over here. That indicator can be either a buy or sell indicator. So now that we know exactly what we're looking for, let's look at the current price or the current action. And as you can see that if you took this indicator right here, you would have made a lot of money since the market dropped and the indicator, or rather the trade, was valid since the top over here right to the bottom right here. So that's about 40% drop. So 40% times your leverage, you can see how much money you're making. So now let's look at the current price and look at the current situation. What I have selected here is BTC USD. So I'm going to click out of that and maybe zoom in here so that we can see exactly what we're working with. So you can see that the market came here and actually bottomed. If I can get my horizontal array, and I'm just going to click there. So that's the bottom that we had during this crash. But you can see that after the bottom, you got a buy signal over here, and you got another buy signal here, and you got a sell signal. So we can see this sell signal was sort of like a valid signal because it was still in between these two EMAs over here. But remember, if you had took this trade right from the top here, you should be ready to exit the trade, or you should be having your trailing stop loss in place. So now let's look at what is happening on the chart. From here you get a buy signal, however it's outside, so it's invalid. So let's fast forward and see what's happening. And as the market is actually going, you can see that you're getting a sell signal also here in between. Let's just pause that. As you can see here, we've got 1, 2, 3 sell signal, or even 4 sell signals. But why these sell signals are invalid even though they are in between these two lines? That's simply because the market has dropped by 40% already. We already calculated that. So going short again here will not be a good idea. So what we should be looking for here is, everything that we covered in class 8. As you can see here, the ultimate guide into chart patterns, how to go from a beginner to pro. So we need to combine these things. So what we're looking for here in a bear flag, we understand that the market dropped and it found a bottom, and basically now we have this channel going up here. So we can only start trading within this channel. So let's go back to the chart. As you can see here, we are forming a channel. So let me just bring in my trend line, and I'm just going to draw a trend from here. Again, I'm on a 1 hour time frame over here. That's what I'm on. So I'm going to draw another line here. Let me bring the trend line again. This may not be accurate, but just for you to get an idea. So now that we're actually on this channel here, maybe it will be wise then to start trading, right? Because we understand that we are now forming this channel. The market is coming to touch here. 1, 2, we already got 2 points connected. So if we come back to the bear flag over here, we understand that the market will most likely come and touch the top 1, 2, 3 times before we get, another retracement. So let's come back to the chart. So basically here, now we understand that the market should come up here, touch here, come down like that. That's what we're expecting. So now in this case, we can use this indicator to then, place these buying orders. Again, even though the market is coming here, we're still expecting the market to even break down because we are expecting sort of like a bear flag. So what we have here is then the ability for us to short the market only when it's touching the top here, or to go long only when it's touching the top here, or if we get a signal in between these two indicators, the 25 EMA and the 99 EMA. So now let's actually look at what happens next. Again, as mentioned earlier, whenever you're trading, you don't just stick on one time frame. You need to zoom in and out. So let's zoom in and see if we're getting a signal in between these indicators. You can see we've got the 99 EMA and the 25 EMA, and we've got these two buy signals over here. So if you then bought from here, let me just bring the tool to go long. Another thing to remember is that this indicator will only shoot on the dead candle. So you can only enter on this candle here. So as much as you're getting the signal here, but you can only enter on this candle over here. So let's go long. You can either go long from here, or you can see here you got another signal, which means you can go long from here. But you can see it's one and the same thing. So let's go long from here, and you can have your stop loss and you can have your take profits. Where do you want to take profits? We know that the market is most likely to come and touch this trend line over here. So that's what we have, and you can see this trade is valid. But it's not only that. Let's bring a horizontal array from our entry point, which is this one here. So now we know this is our entry point. Let's just make that maybe green, and maybe let's turn it up to 4x. Then I'm going to zoom out. Everything is getting messy now, but anyway, I want you to understand that from here, this is our entry point, and you can see that the market is still trading above our entry point, and you can see that we've got no business of closing this trade. What we can do is to put our stop loss behind our entry price, which means we will have sort of like a guaranteed profit. So let's change back everything to 1 hour, and you can see that irrespective of you being under 30 minutes or 1 hour, you can see that we're still more or less in the same channel over here. But in an overall perspective, we understand that we're expecting the market to eventually break below this because we're expecting a bear flag. So it's very important that we should be able to take our profit or put our stop loss within this price range over here. So let me just clean this up maybe. So to get the best out of this indicator, just make sure that you're only trading when the market is moving either bearish or bullish, not when the market is moving sideways. As you can see here, the market is sideways, so there isn't enough movement. So that means that you may likely get a false signals like this one here. You can see this one here is a false signals because the market is moving on the sideways. So that one is very risky. And here is a perfect example again. Whenever the market is actually moving either bearish or bullish, you can see you get a very good signal. You can see the signal right here, 1 2 3. All these signals here telling you to go short, and all those trades would have been profitable. So later within this course, we're going to be taking the very same trades in real time, in real account, and adding additional EMAs in order for us to get even stronger signals. But we're going to be using this on a real account. I'm very excited about that. This video was just an introduction on how to use this indicator, and I hope that you can watch class number 14 so that you can understand how to actually integrate this on your demo trading so that you can start back testing this indicator. Now I'm very excited about what's coming up next. Please join me in our next class where we're looking at chart patterns, how to go from a beginner to a pro trader. Now click on the video showing up on the screen right now, and I will see you there. Goodbye for now. Bye bye.